Welcome back to the channel, everyone. Today I want to talk about why crypto is crashing and how it could be because of AMC. I want to talk about the impact on AMC and whether this is a good thing. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Trey's trades started by tweeting R, the standard and usual random and unexplainable crypto sell-off right on schedule. Astro replied saying there's an extreme inverse relationship between crypto and AMC and GameStop. I'm very excited for Monday. Now I don't want to give it a specific time deadline for Monday as I still think this could take another week or two to potentially play out, but I'll explain exactly what I think is going to happen in a little while. Jeremy also replied saying in January 2021, crypto dumped and the following week meme stocks ran upwards. On May 20th, crypto dumped again and 2 weeks later, meme stocks ran upwards again. December 3rd, crypto has dumped unexpectedly, but I wonder what's to come. To be continued. So why is crypto dumping right now, and how does that tie in with the wider market, and how does it tie in with what's happening or potentially going to happen with AMC and GameStop over the next week or two? Well, Joshua tweeted saying this crypto bleed is definitely to cover margin calls on Monday. No way you can convince me otherwise. If you haven't already seen the price of Bitcoin, it dropped around 23% almost instantaneously at midnight last night. So what exactly is going on with Bitcoin here and why is it crashing so heavily? I thought Bitcoin was supposed to go up when the stock market was going down because Bitcoin was supposed to be a good hedge against the recession. Well, I think back in 2017, 2018, 2019, most of the people invested in crypto were regular everyday investors and many banks and institutions were straying away from crypto. Therefore, back at that time, I do think that Bitcoin would have been an excellent hedge against a recession, because as stocks started to go down, many hedge funds and institutions and banks would have been pulling their money out of stocks and would have started investing into crypto as a hedge. But I think especially over the last year or two, tons and tons of banks and institutions and hedge funds have all been jumping into crypto as well, and they've been doing so with a lot of leverage. Obviously, I've spoken in my last few videos about how margin levels at institutions is at an all-time high, and there's so much more leverage trading available with Bitcoin and other cryptocurrencies. Not only can you just be leveraged 6.8 times like Citadel are with stocks, but with Bitcoin, obviously you can be leveraged up to 100 times, maybe even higher on some platforms. And therefore, I do think that right now there's many institutions that are investing in Bitcoin and other cryptocurrencies and are also very heavily leveraged. Therefore, when they get liquidated or need to take cash out, it makes a massive impact on the price. If you didn't already know, Moomoo are currently holding their biggest ever promotion. You can currently get up to $17,500 in free stocks just for signing up with Moomoo and making your first deposit. Linked in the description below. Moomoo is also an excellent investing platform. They've got free real-time level 2 market data, they've got advanced charting tools, they've got 24/7 real-time financial news and a global investment community so that you can get ideas for your next stock purchase. To get these 5 free shares, you need to open an account to get your first free share, deposit any amount to get your second free share, and deposit at least $2,000 to get the final 3 remaining free shares. Now you might say, Tom, why would institutions need to sell off their Bitcoin if they're making so much from their investments? Why wouldn't they just leave the money in there and keep on adding more money? Well, obviously it was a very red day in the markets on Friday, and therefore there may be some institutions out there that got margin called on Friday and needed to find cash to meet that collateral. Now you might say, Tom, surely they can use Bitcoin to meet their collateral margin requirements because Bitcoin is a very safe asset. Well, actually, it probably doesn't classify as a safe asset like a bond or treasury or cash, and therefore they cannot use Bitcoin to meet those margin requirements. Therefore, they actually have to sell off their Bitcoin to meet those margin requirements that were issued to them on the Friday. And obviously, they have to meet those margin requirements probably either by Friday at midnight or by Monday morning. As Marge Simpson is saying here, don't forget, crypto can't be used as collateral, so you're going to have to sell it to get that cash. And the reason why Bitcoin dropped so dramatically is because so many of these institutions have been investing into Bitcoin over the last year or two and doing so with a lot of leverage and a lot of margin. Therefore, when they wanted to sell their Bitcoin to get the cash back out, they had to sell a lot of Bitcoin, therefore causing such a dramatic drop in price. And obviously on top of that, if you've got an institution that's selling off, say, $100 billion worth of Bitcoin, it's going to drop the price very dramatically, which is going to cause a lot of liquidations as well, because many other institutions and retail traders are trading Bitcoin with such heavy leverage, not just 2 times leverage or 3 times leverage, but 20, 25, 50, even 100 times leverage. To put into perspective what 100 times leverage actually means, it means that if Bitcoin falls by 1%, you lose 100% of your original investment, therefore being liquidated. And if you can't read that, it says right there that Bitcoin dropped by 23% yesterday night. Therefore, if you are using 100 times leverage, 50 times leverage, 20, 25 times leverage, whatever it might be, you would be liquidated unless you are using less than 5 times leverage. CoinMember has actually got the specific figures saying don't be sad if you got liquidated, because it wasn't just you. In 1 hour, there was $5.89 million worth of Bitcoin long trades that were liquidated. In 4 hours, $108 million. In 12 hours, $1.79 billion. And in 24 hours, $2.53 billion of Bitcoin was liquidated, or $2.53 billion of Bitcoin long trades were liquidated. And in the past 24 hours, 401,000 traders were liquidated, and the largest single liquidation order happened on Bitfinex with a value of $27 million, nearly $28 million. Now that trade was placed with leverage in order to be liquidated, and it was placed with a leverage or a margin of over 5 times, but still that means that's at least $5 million of original cash invested that's just disappeared. Now, so how exactly is Bitcoin and AMC linked? Well, obviously, back in January, we had this Bitcoin crash here, and a week later, AMC and GameStop ran up. Back in May, we had again this very large Bitcoin drop, and then 2 weeks later, again, obviously, AMC and GameStop ran up, mostly AMC this time. And now here in December, obviously AMC has been falling for the last week or two, and Bitcoin had a very dramatic drop over the last day or two. So what's potentially going to happen over the next week or 2 weeks or 3 weeks? Well, potentially AMC is going to run up again. Now you may say, Tom, back in January, Bitcoin fell and AMC ran up. But AMC didn't really fall while Bitcoin was falling. Same in June. Bitcoin fell and AMC ran up. But while Bitcoin was falling, AMC kind of traded flat and didn't really fall. So why this time round is AMC falling so heavily? And I think it goes back to something I said earlier in the video. Back in 2017, 18 and 19, Bitcoin was being traded by and invested into by regular everyday people and not many institutions. Back in January, AMC was largely being invested into and traded by regular people and not many institutions. The same can also be said for May and June. We didn't see many institutions flooding into AMC until their Q3 and Q4 13F filings. There's a chart that I was trying to look for, but I can't exactly find it, but it basically shows AMC institutional investors back in 2019 being down here. In Q1 of 2021, it was very low again. Q2 was fairly low, but in Q3 and Q4, it really shot up. There's been so many institutional investors that have been investing into AMC over the last 2 quarters, but not many of them were invested back in 2020, 2019, and early 2021. And therefore, I think because the wider market is starting to trend downwards, many institutional investors right now are having to sell off their AMC to meet these margin calls, and are now having to sell off their Bitcoin also to meet these margin calls. But obviously, when a very heavy sell-off of Bitcoin occurs, it's largely because institutions are trying to meet these margin calls, and they may not be able to meet these margin calls and get liquidated and forced to cover their shorts, obviously pushing the AMC price upwards and causing the mother of all short squeezes. Now, something I found very, very interesting, which potentially proves my theory of Bitcoin not being an excellent hedge against the recession, is comparing the price of Bitcoin over the last few days to the price of gold over the last few days. Obviously, we know that Bitcoin has fallen from its highs of around $69,000 all the way to at one point around $46,000, but the price of gold hasn't really fallen so far. It's fallen from around $1,850 to around $1,800. That's obviously a much smaller fall, a much less drastic fall. So interestingly, it does seem like actually Bitcoin may not be an excellent hedge against the recession, but gold likely still is. Now, something interesting I also found is that Goldman's basket of non-profitable tech stocks just posted the worst week since March of 2020. I wonder whether this is a sign that the recession or the market crash is starting. You can see here this batch of tech stocks back in March of 2020 performed at about -16, -15.5%. This week they performed at -14.95%. That is pretty much lower than every single week over the last 2 years. Obviously, some weeks we saw them perform exceptionally well, up nearly 20% on the week. But obviously, some weeks they were performing at -5%, -10%, but none really ever close to -15%. Especially as these tech stocks have also been performing at -5% to -8% over the previous 2 weeks as well. I think it'll be very, very interesting to see what happens next week to the S&P 500 and to the VIX, whether the VIX continues trending upwards and whether the S&P 500 continues trending downwards for another week. I think if the S&P 500 does continue trending downwards, we're going to see even more institutions being margin called and being forced to sell off their Bitcoin and their cryptocurrency holdings to get more cash to meet those margin calls. Now, I also wanted to talk about Wall Street deploying its dirty tricks playbook against whistleblowers and how they've been doing it for decades, and now how the secrets are spilling out. For more than 2 decades, the general counsels of Wall Street's mega banks have been meeting together secretly once a year at ritzy hotels and resorts around the world. This would firstly appear to be a clear violation of antitrust law, but since Wall Street's revolving door has compromised the US Department of Justice over much of this time span, there's been no pushback from the Justice Department to shut down these clandestine meetings. Because obviously many people that work for the SEC or the Department of Justice do have the intention and the desire to go and work at some of Wall Street's biggest banks maybe a year or 2 in the future, so they tend to avoid sticking their noses into anything. Wall Street insiders say that among the top agenda items at this annual confab are strategy sessions on how to keep Congress from enacting legislation that would bring an end to Wall Street's privatized justice system called mandatory arbitration. This system allows the most serially corrupt industry in America to effectively lock the nation's courthouse doors to claims of fraud from its workers and customers. This private justice system also keeps the details of many of Wall Street's systemic crimes out of the press, just like what's happening right now with Ken Griffin and Citadel. Wall Street's justice system is just one element of a fully loaded dirty tricks playbook that Wall Street uses to crush an honest worker who is intent on holding the firm accountable. The playbook includes gaslighting, which we've seen a lot of with AMC, a campaign of ordered ostracizing by co-workers, again like we've seen of AMC, demotion, an internal investigation with a preordinated outcome to malign the reputation of the whistleblower, blackballing in the industry, and frequently the ultimate humiliation of being escorted out of the building by security guards. As the dirty campaign unfolds in front of colleagues, it achieves the intended additional goal of silencing any additional co-workers who might be thinking about reporting illegal activities. Basically stopping whistleblowers from whistleblowing. Following this psychological warfare inside the Wall Street firm, again a word we've heard all too much over the last few months, psychological warfare, the honest whistleblower will be met with the next chapter of the sociopathic playbook. Wall Street's star chamber tribunals if he or she attempts to get compensated for damages, lost compensation and so forth. The Wall Street firms frequently bring current employees who are friends with the fired whistleblower to testify to outrageous lies about the honest worker in an effort to inflict more emotional damage to ensure this individual will look for future employment anywhere but Wall Street. The article then gives examples of actual employees that have been discredited or attempted to be discredited by their firms, whether it was JP Morgan or Goldman Sachs, but how they use tape recordings in order to justify and prove their whistleblowing. I personally think it's absolutely crazy, but it doesn't surprise me that this actually goes on in Wall Street firms in order to curtail whistleblowers to try and prevent them from blowing the whistle. Guys, be sure to let me know down in the comments below what you think about the crypto crash and whether you think this is tied to AMC and whether AMC could run up in the next 2 or 3 weeks. Also guys, if you wanted to stay up to date with my latest stock and crypto picks, or if you just wanted some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!